Welcome, everyone. I'm Maria Lourdes Serán, Vice President of the Council of the Americas here in Miami, and I'm thrilled to welcome you to today's Bravo Leadership Conversation. The Bravo Leadership Forums have become our signature platform for engagement and dialogue, bringing together Latin America's business leaders to promote cross-industry collaboration on critical issues impacting the region. These conversations offer a rare glimpse into the challenges and triumphs of remarkable business visionaries who are transforming their industries and driving positive impact in their fields. These conversations are available across our platforms. You can watch them on YouTube, LinkedIn, or listen to them as a podcast on your preferred platform. Today, we are honored to feature Pedro Arnt, CEO of dLocal. Pedro brings a wealth of experience, having served as CFO at MercadoLibre before taking the helm at dLocal, Uruguay's first unicorn. In his current role, he continues to drive innovation in payment solutions, connecting global enterprise merchants with billions of consumers in emerging markets across Africa, Asia, and Latin America. Pedro will be interviewed by Jorge Becerra, Emeritus Senior Partner and Senior Advisor at BCG. Their conversation offers a compelling perspective on Pedro's leadership journey from the early days of the internet economy to the present, where fintech solutions are reshaping commerce in the global south. Before we begin, I want to thank the sponsors of our year-long Bravo series: Amazon Web Services, Chubb Latin America, Bank of America, Castillo Hermanos, Moody's, Salesforce, the AES Corporation, as well as our media partners, America's Quarterly, Bloomberg Linea, and CNN en Español. I invite you to visit our website at www.as-coa.org/Bravo2025 to learn more about this year's symposium and 30th anniversary of the Bravo Business Awards, our landmark conference taking place in Miami on October 16th, where you can meet many of these visionaries in person. Now let's get started with today's conversation.
Thank you. So I'm also very sort of honored to have Pedro, not only because what he represents professionally over this last more than 20 years, but also personally. He may have some stories about our initial origins more than 20 years ago. But the idea, Pedro, is really to thank you for the openness to share these conversations as part of this CEO leadership series at the council, both from the personal experience, your own personal journey, but also on the professional side. And it seems like there are some like common themes that made manifest in your stories. One would be about emerging markets based on your own experience. Another dimension would be about scaling up businesses, and I think the third that could be more distinctive based on many other stories that we know from startups and fintech in Latin America is this unique combination on local and global. And one of the themes that I know Pedro would share, it's an emerging theme, is some of, as you said, Marina, distinctiveness that Latin America could bring in terms of innovation and in some cases leapfrogging. It's about creating a space and a platform to do that with the sense of the global south. And Pedro will talk more about a global south. We have been talking for many years about multi-Latinas and global challengers, but the sense of really trying to make a connection between Africa, Asia, and Latin America is quite distinctive. So let's go into the stories. I think we would all benefit in a short recap on your origins and story and how the story began. And then also some brief descriptions. I know that you may have many of your clients here that are advocates probably on what you offer, but also for those that may be less familiar, a brief description on what dLocal offers today. But let's start with your own story.
Thank you, Jorge, and thank you to the council. for the invitation. I'm going to start with a bit of my personal background, in part because the 20-year-old in me is quite, I think, um, amazed that I'm sitting here with Jorge, and I'll tell you in a second why. But I also think it's an interesting anecdote on human capital. So, Jorge gave me my first job more than 20 years ago. I had been someone who thought I was going into academia. I had gone on a PhD track to study in the UK, and I had realized fairly early on that that world was not for me. But I had spent the previous 6 years of my life deeply immersed in academic world and knew very little about the business world. What does one do when one has that background? One goes into consulting. Right? You're the ideal person to tell other companies what they need to do. But joke aside, I think it was fascinating that Jorge and the team at the Boston Consulting Group were able to make a bet on someone's intellectual curiosity, willingness to learn, willingness to work. Whereas genuinely, I'm talking in the 90s, most of the letters I had sent in Brazil and Argentina were these very polite, "We're very happy for your interest in our company. We've seen you've gone to some really prestigious universities, but we basically hire engineers and lawyers. Thank you very much." And BCG was one of the few places that said, "Hey, come in, let's have a conversation, let's see how you think." And I think that's really been a guiding factor, both in how I've tried to choose where to go next, what to do next, how to choose professionally what I want to do. And that's many times the advice I give people, young people, when they ask me is basically follow your curiosity, follow your intellect, and most importantly, ask yourself, will there be an opportunity to have impact on this business if I take on this role? And if you have yes to those three answers, then go do it, regardless of what you had planned out for your career previously. So, Jorge, it's amazing how we've come full circle. Thank you, and great to be here. dLocal, very quickly. Um, dLocal basically is a company that was founded to solve what is potentially the biggest barrier to adoption of digital services across the global south, which is that the payment environments across emerging markets are extremely different than in developed markets. So if you're an Amazon or you're a Netflix or you're a Tesla or you're a Spotify, your businesses essentially have emerged and haven't really had to deal with payments as a problem. If you look at developed markets, almost all transactions online are carried out through credit cards. Everyone has a credit card. Authorization rates are typically 93, 94% plus. So you don't really have a problem of declines. And so it's a non-issue. And therefore, most of these companies that are incredibly sophisticated across almost everything they do have never had to think of payments as a pain point or something to solve. And then their go-to-market strategies for emerging markets start coalescing. Netflix is a great example of this, and Netflix has been very public about this. And they realize that emerging markets are very different, right? A vast majority of transactions still occur in cash. Large parts of the population are either unbanked or underbanked. And more interesting, to Marina's point, credit cards are only a portion of the way consumers want to pay. There is extreme fragmentation, in part because of how underdeveloped financial systems have been, but interestingly, also the other extreme, how much innovation has occurred. So we have something like Pix in Brazil. We have the explosion of digital wallets that almost rivals what we're seeing in Asia with Mercado Pago, Yape, Neki, and all these things. And so these global Fortune 1000 or Fortune 2000 companies all of a sudden realize that payments are not a commodity, but actually something that needs to be solved for. And that trying to solve this for every single emerging market becomes very difficult to scale. And so that's where dLocal comes in. What dLocal essentially offers is a single integration into our API, and then we abstract all of that complexity across almost the entire global south for merchants. So we allow them to not have to worry about any of that. We do all the heavy lifting, and essentially all they have to do is integrate us into their checkouts or their apps and then receive settlement back in their home markets. That's dLocal in a nutshell. And any of you who are from Latin America or who ever tried to sign up for a digital service in Latin America prior to the emergence of dLocal would have realized that it's a nightmare. VPNs, international credit cards, all sorts of hoops you had to go through.
That's great. But let me now go back a bit to the Meli years, because that somehow was part of your own journey of preparation and learning. And given your many roles within Meli, any of those observations and learnings at that time that you feel really prepare you for the next challenge now at dLocal? And we'll come back then to the dLocal.
Yeah. So I joined Marcos and the Meli team. I think I was something like employee 22. It was very early days. And I remember that we always used to receive two big reasons why this was the dumbest idea we could have ever had, which is eBay will never work in the region because Latinos simply don't trust each other, and they will always end up screwing each other. So this is just not going to work, right? eBay had somehow tried to attack the trust issue through their famous feedback system. So you knew who you were interacting with because they were able to show you, look, this person has done 2,000 transactions and has never let anyone down. So we had built that, but we realized fairly quickly that although that cultural stereotype of Latinos was wrong, there was an issue of trust in our societies. And so we were going to somehow have to solve the issue of trust at the core of payments. And so I think the concept of eating your own dog food is that many of my formative years at MercadoLibre and how we were trying to solve for the complexity of e-commerce across the region really had to do with solving for payments, right? Who pays first? Do you leave that money in escrow? How do you pay when you're not seeing the counterpart face to face? And this is an individual who doesn't have a POS, because many times your seller was not really a professional merchant, it was another individual. All that eventually led to Mercado Pago, which is today the most successful digital wallet in LatAm. So I had faced the day-to-day challenges of how scaling a business in the region was really, really, in many ways, challenged by payment solutions. And on a more general note, Jorge, I think you mentioned scaling, right? I think in many ways, my professional life's journey has been, how do you build something from something very small, employee 20. I was looking at their latest disclosures, and they've actually crossed the 100,000 employee mark. So they're probably one of the largest employers in the region. And all the mistakes, but also the things we did right as we built that out. And so when I was looking for my next challenge professionally, I wanted to take the step from CFO to CEO. One of the things I was looking for was a business that was still kind of right before that hyperscale phase, where it was no longer a startup. It had proven product market fit, had an attractive financial model, had a strong roster of merchants, but still hadn't really hit hyperscale, because I felt this was a marvelous opportunity to capitalize on not committing the same mistakes over again and actually bringing to the table a lot of the learnings that we had had as we built out Mercado Libre.
And I would imagine that it's a transition. It's not only bringing your learnings and background and experience from that scaling up at Meli, but also the transition into a role that it somehow um, share with founders. And so moving into becoming a CEO of a unicorn where you're becoming the CEO with the founders on the side. So both on the professional side, and I think at some point you mentioned life stages of some of these organizations and how the founders could be critical to the 0 to 100. How are you envisioning now for dLocal the stage of the 100 to 1,000 with that uh, join sharing with still, I guess, some few founders there? Yeah.
Yeah. So this has been one of the fascinating challenges, right? When I was thinking about, do you want to take on this role or not? One of the things that concerned me the most is that if you invest in technology or if you follow the technology world, there's kind of this maxim that I think many investors follow, which is founder-led companies work. Once they transition over to professional management, everything goes south, right? And I think there's countless examples where that's true. The most iconic one is Apple, where Steve Jobs actually had to come back and then prove that with the founder there, what had stopped working worked again. Tim Cook's been a good exception to the rule. But so we were very deliberate in understanding this reality, in knowing that we were walking into a very risky situation, but also acknowledging, as happens, but not everyone has, I think, the privilege of having a Marcos Galperin, who was the right guy for 10 people, it is the right guy for 100,000 people, or a Martin Migoja. I think in many cases, the founders themselves realize that either it's not what they want to do, it's not necessarily an issue of capacities. If you talk to Seba, he'll say, I never wanted to be a public company CEO. Or they realize that their skill sets were maybe very well set for 0 to 100, but not necessarily for 100 to 1,000. So I think we were very deliberate in how we've tried to manage this transition. Time will tell how successful we've been, but there are a couple of things we did that I think are interesting. The first of all is they went and looked for someone who wasn't your traditional professional background. They could have gone to someone at Santander or to someone at Visa or MasterCard, and they very deliberately didn't. They went to look for someone who came from, MercadoLibre is not a startup anymore, but someone who was there during the formative years and who came from a digitally native company that shared in many aspects values, management systems, management styles of digital native companies, so that you're not trying to force a square peg into a round hole. The second thing is we established a transition period. So I actually coexisted as co-CEO with one of the founders for about 6 months. And those were 6 months where I learned from him. He gradually showed to the organization that he was handing over the reins. We never told the organization, this is a 6-month period. We told the organization, you will now have 2 co-CEOs. They've figured out who does what and how they organize work. They're not sharing that with you. They're both the CEO. But that really helped in terms of internal messaging. And primarily, I think it helped in terms of culture. It gave them a chance to see me acting and to say, hey, we're worried about this cultural dimension. Let's see how we position this. So that worked very well. And then the third thing we were very deliberate about is this company had about 5 founders, 3 of them who were on the management team when I came on board. And so what we decided to do is we sequenced how each one of them would transition from a management role to a board role. First, the CEO, because although we told everyone during the first 6 months that we thought it was a great model, everyone knows 2 CEOs does not work. We made it work for as long as we had to. And then another one of the founders stayed on another 6 months as COO, and then we replaced him for someone else who came over from MasterCard. And we still have one of the founders as the chief strategy officer, and that's the final piece that eventually will decide transitions over. So from being very deliberate, thinking through the pitfalls and trying to really manage the transition process, we've planned it as carefully as we possibly could.
And I guess listening to you, I think there are some parallels between the 20th employee to the 100,000 to the transition from the founders to a professional CEO. And that would remind me the pendulum that we live over the last 20 years since the whole digital revolution started in the trade-off between incumbents plays and disruptors or attackers. It seems or it feels like you are in the middle of that blending because now with the aspiration of the scale up, many of the things of the moves that you mentioned feels like more of a traditional incumbents type of organizational moves of thoughtfulness in planning those moves. How are you anticipating this scaling up and somehow adoption selectively of practices of incumbents might be beneficial for the local and or you are seeing in some of the other incumbents that after maybe 10 or 20 years of trying eventually might be coming back.
Yeah.
Yeah.
So it's fascinating, right? And I think I've now been in this digital space for like 26 years, 25 years. And so you can clearly, I think, delineate periods of this. There was clearly an initial period where a lot of these practices of how you manage a company, how you allocate resources, how you manage human capital, that were emerging from the digital companies, even out in Silicon Valley, the Googles, the Facebooks, Meta, the Netflixes, um, were radically different to most of the management practices that were most common by the most successful companies of the previous era, right? And a lot of the academic work done was also about that, was about how the digital world, digital distribution, digital talent, next generations coming into the workforce, in a way required a completely different playbook on competitive dynamics, go-to-market strategy, human capital management, capital allocation, internal metrics, which allowed the Googles, the Metas, many of these digital companies to become so dominant in their spaces. Because quite frankly, the incumbents weren't set up to compete in that space. And I'm sure Jorge sold endless projects to help those incumbents figure out what it was they had to reinvent about themselves to be successful. And then you had many managers and people who worked at these incumbents who would try to learn from these digital companies, copy these digital companies, courses that were given about this. And we can talk about all sorts of things, right? But it's intuitive nowadays. And I remember, for example, Bain, we can badmouth Bain, right? Bain even has a strong, very strong amount of research work where basically they call it founder's mentality, and they show how for many years, when startup companies were going through these scale-up phases, and they would try to bring in a lot of outside industry experts, 9 times out of 10, eventually those companies failed because they would lose what made them distinctive as disruptors, yet they didn't have the scale or the culture or the management practices of the incumbents to behave like an incumbent. And so they became something in the middle that was basically just a watered down version of their original disruptive nature. And most of the successful ones, and hence the founder-led issue, were the ones that maintained very disruptive practices. That was phase one. What's happened since, I think, is very different. It's two things have happened. First of all, I look at a lot of the incumbent companies, and they've now figured all this out. Like you look at even the banking space, you look at a bank like Itaú, quite digitally savvy, quite innovative, has defended position extremely well. You look at Walmart, who for years was sort of just, the pummeled by how Amazon was eating away share and all these digital disruptors, and they would try to buy their way into being relevant online to fix and didn't work. Today, Walmart is extremely relevant online, continues to be the largest retailer in the world, and has really blended online and offline very well. So I think the first thing that I've called sometimes the empire strikes back is that the incumbents have definitely gotten very good at digital.
Yeah.
The other piece is I think it would be foolish for digital companies, and my point of,
Yeah.
even if I look at who I'm hiring, right? For my C level, I brought in a COO from MasterCard, a CFO from GE. So I've gone to these emblematic incumbent companies because I think we also have to recognize that there's a lot of managing businesses successfully at scale and under the public eye that, quite frankly, incumbents are much better at. And so I feel like we're now reached the phase where I'd even say companies I think are stronger and better managed because it hasn't become either you're one or the other, but it's really this combination of the best of both worlds. And that's what we're aspiring to find at dLocal.
And of those, let's say, many possible dimensions on your, let's say, your strategy, your culture, from, let's say, product innovation or user experience, talent, organizational models, what are you aspiring to still make
Good.
that blend distinctive for the local going forward? Because it may be a bit of a blend or maybe only on one side.
Yeah.
Uh,
No, and it's very interesting. I think so. Let me break this out into what I think some of the key components of what we offer are, right? Um, there's definitely an element of the technological stack
yeah.
and the product innovation that I would rather we try to emulate Stripe, right? So digital native, engineering culture, trying to bring the engineers more into the center of the decision-making process and to have the business flow from the technology. I think Bezos says, work your way back from the consumer into the product. And I'm kind of trying to work my way back from the product into the business model, which is not necessarily something we had. So that you steal from the digital natives. dLocal is a highly regulated company, right? We operate in fintech. We have over 20 licenses or registrations. When I look at how you manage regulators and you manage a regulated business, it's not the startups that you want to be taking your best practice from. I think startups have typically been about get the government off my back because if not, it stifles innovation, which is questionable. For all that part of the business, compliance, regulatory, we're trying to lead heavily on know-how and background that come from incumbents. And then there's a third one, which is, I think, just operational excellence and feet on the ground and how you operationally manage a business. If you think of what we do essentially is we become the local payment teams for our global clients. And that means interacting with local banks in each one of the 42 markets we operate, with the credit card acquirers, with alternative payment methods, with regulators, with civil society, et cetera. And I think for that kind of global company, this was new for me coming from MercadoLibre, that managing 42 companies across the global south, where you're managing Malaysia, Kenya, Ghana, Bolivia, and El Salvador, you clearly need to have people who have managed that kind of global complexity, which many, many times you're more prone to find at large global corporations like a P&G and Unilever or a Bank of America than you will at a startup.
Mm. And in that, maybe some words on the organizational models, because you at the end could believe that the culture as an aggregated way of showing common behavior in an organization, it's the essence, but still some hardwiring of processes would incentivize given behaviors. How you manage that blend or the local?
Yeah. Um, Spent a lot of time thinking about this recently. So for the following reason, I think one of the natures of a startup and a digital company, right? And I think if you spend time with highly successful founders, and I spend a lot of time with a lot of them, most of them, I don't want to say all of them, have a profound distrust for process and method, right? I think the success in the startup phase is the famous get shit done and focus on the consumer and the product. Process, method, and organograms are noise that push us away from our ultimate goal. And so when you hear a lot of successful founders, they will talk much more about culture as the way to align behaviors, incentives, and how the organization works, and not process and method. And if I think of dLocal, that's definitely what the founders were incredibly successful at determining a very clear culture, very clear behavioral expectations, very focused on results, very focused on moving quickly on behalf of our merchants. And so I think culture is critical. And you have to be very careful to not lose culture, because I do think that that's one of the competitive advantages versus the very large companies where cultures many times tend to become more risk averse and just prone to survival of the employee rather than actually doing great work on behalf of your client. But I think there's an obvious limit to how far you can get with culture when you have to manage across 40 markets, right? And I always tend to look at two things when I try to understand this. I try to look at the military and I try to look at sports teams. And both are incredibly process focused and not just culture focused. And so the question becomes, how do you introduce process without allowing process to kill culture? That's almost what most seduced me about the opportunity. It's because it's very easy to do in a lab and thought-wise. In practice, it's extremely difficult, because it is true that the more you introduce process, the more there is a tendency to kill the positive aspects of culture. I'm smack in the middle of this one. I think some of my guiding principles have been a couple. It's been, and I keep telling this to my teams, there's only one thing that I can envision that's worse than no process at all. What do you guys think that may be? It's bad process, right? So I keep telling them that. I'd rather stay without any process like we survived so far. If you're going to make a process, make sure that the process works. The second thing is, you can never assume that because you've built the process, it'll work forever. Process is kind of like mowing the lawn or cutting your nails. Even if you institute it fairly recently, you need to come back and revisit it every 6 months to 12 months, because if you don't, your business has probably evolved in a way that the process wasn't initially thought out for. And so the process now has become not an assistant to better results, but a problem. Most companies don't revise process. Process becomes kind of ensconced as the way we do things, and then they become a huge, huge problem. And then the third one that we typically try to discuss a lot, and you talked about organizational design, is organograms, right? Organograms are dangerous because organograms, again, it's stasis, right? An organogram is basically, you, Jorge, are the VP of such thing, and this is what you do forever. And your function is to do this. Whereas if you look at business challenges are constantly evolving. So there's really interesting data that shows that very successful companies actually rotate their people around so that the best people are assigned to the most important challenge of that cycle. Where the organogram doesn't do that. And I remember at Meli, we had to have this fight all the time, which is, hey, we've just launched a new product, or we have an entirely different business strategy. We need our best people here. What happens with the organogram? You go over to the functional head and you say, hey, we'd really like to send your 3 best people over there. His reaction or her reaction is, hell no, that's my best people. Right, but this is no longer where we need them. And so you have to be really careful with organograms. You have to at least be very willing to rotate people around, or find design mechanisms that don't simply push stasis, right? One thing I've done here, I've also learned this I didn't know walking into it, but I think most global corporations start to tend towards regional organograms. I think because instinctively, I just said 42 markets across 4 continents. How are you going to manage that? Manage that regionally. I have resisted that one tooth and nail, and we are a functional organization. And the reason for that is what I think I learned from private experiences is that unless your business really needs an incredible market localization because it's very different from market A to market B, which is not the case with payments. And we'll talk about it when we talk about globalization. Regional structures become inefficient because the regional guy, he wants his own accountant. He wants his own marketing person. He wants his own product person. And so you start replicating across the region all these functions, which you then have to have a regional overhead to manage alignment between them. They're never aligned anyway, and it becomes incredibly not efficient. Whereas what we're trying to do is functional. So if your product, and it's global, and you can move resources around, etc. The disadvantage is you may lose a little bit of local market know-how. The way we fix for that is we don't have country managers. We have country operational leads who part of the job description is to continuously feed to the different functions local market functionality. But so I think org structures also should be thought through very carefully because they significantly impact, I think, the nature of the organization you have and business outcomes. I like functional organizations. I'm convinced now.
Before wrapping up, I would have really two quick hot questions that you may try to answer concisely so that we have time for the open
I talk a lot, sorry.
question. Yeah. No. We are fine. But just to share, and I guess many of you might have sort of followed some of the basic data on dLocal, but are truly impressive. I think last year was almost 26, 27 billion of total payments volume, more than 750 revenue, and 190 as adjusted EBITDA in a fairly rapid growth, more than 30-45% in the total volume last year. So that's impressive. Half of the volume, I think, is cross-border. So it's truly with that sense of globality, cross-border. And now I guess it's 2/3 might be Latin America, but growing significantly Asia and Africa. That's, I guess, an expression of what a global South company could represent in that regard. And the two comments was your quick view on how to, there are many stakeholders in trying to make that vision that you described happen. One would be the senior management, and the other one would be the key stakeholders of your investors and the board. How the question is how compensation could be an effective lever for senior management, including you maybe, but including your senior management as an addendum to the culture and processes that you have defined to accomplish that sense of the vision. And the second one, in this rapid growth environment, where there is a lot of, let's say, different type of investors, those that are focused, as you said, on payments, regardless of the geography, on those that are focused on emerging markets because they believe your thesis on sizable market, high growth, and high margin. As a CEO, how are you trying to balance those different stakeholders?
Yeah. Oh, let me
I know that are long.
No, I'll go.
But try.
I'll go from back
Yeah.
to forth. So on stakeholder management, I should ask Juan for his help and opinion on this. But so I think what's happened now is many of us, we lived through a market that was, I think, very low interest rates and basically most investments worked. And so investors were much less discerning about, is this a tech or is this an emerging market play? Because kind of everything worked. And so when you looked at your shareholder bases, you would see a pretty big mix of tech investors who maybe everything they owned was US tech, and then they'd have dLocal in the middle because for them it was tech and everything was up and to the right. Or you'd have these emerging market investors whose portfolio was Vali, Petrobras, Pemex, YPF, and dLocal, right? And it all worked and we were all happy and everything was worth a lot. I think with a much more I would say, mature and coherent market, that's become a real challenge from a stakeholder management perspective, because I sometimes feel like we're in a bit of a Goldilocks issue, which is when you target the tech investors, who are the ones who are more accustomed with, 30 times EBITDA multiples. And when we talk a lot about product launches, we talk about these strange ideas like functional organizations and things like that. And they're familiar with that. But then all of a sudden they wake up one day and Nigeria devalued. And what's this thing about three currencies in Argentina? And they don't know what to do with that investment. Um, so then you move to the emerging market stakeholders. And again, they're like, yeah, I get it. I invest across most of your markets. This is really interesting. But, what's your price to book value? Or what are your physical assets? I'm looking at YPF in value and Vale, and you basically have no assets on your balance sheet. Why is this company worth anything? So it's been challenging to really find, and I think public companies in this emerging market tech space, really one of the key, I think, shareholder management strategies is how do you find those pockets of money that are actually able to straddle both worlds? Like, fortunately, what's beginning to emerge now is this notion of emerging market tech, which didn't necessarily exist in the past. It's a bit tricky because I think I was telling you, when you look at the actual numbers for LatAm, at least, that I look at closely, emerging market tech is like 95% Nubank or MercadoLibre, maybe 3% Globant, and then everybody else is the rest of the universe. But we're getting there. We're beginning to have more tech savvy emerging market investors. But it is I think one of the key aspects of managing these public companies from the region is finding the right investor basis. You had three things.
The compensation.
Compensation. Yeah. Look, I think I've been through, especially my days as CFO, I've been through all the possible models, right? Like, you have to give people very short-term, very high variable bonuses because you drive short-term results. No, wait a minute, we want long-term results, so just give them bonuses on strategic projects. I think really depending on what you're solving for, you're going to land in a different solution. Where I'm at today is, I think, sales forces, you clearly need the variable piece. I I've increasingly favored more and more what we call bounties, but it's basically you have a good base salary because you need to hire good salespeople. It's very difficult. And then rather than giving them additional bonuses based on any volume that they bring, so you give a lot of discretion to the salesperson, and they'll say basically, if $1 of Netflix is the same to me in terms of my bonus as $1 of, I don't know, some tier 3 Chinese merchant, then they'll go and chase the Chinese merchant because it's easier. Whereas if you work with bounties, which is what we're trying to move to, you very specifically say, this is the prize if you bring Netflix. This is the prize if you bring Amazon. If you bring something that we believe is strategically less important, it's lower. Outside of that, for the rest of the team, I'm increasingly fond, if it's a publicly traded company, of simply saying you have a strong base salary and then you have a long-term incentive, which is long-term. So it's usually even a 5-year vesting, and it's tied to capital market performance. And you are then 100% aligned with your shareholders. And theoretically, that will move you away from both short-term decision-making, although the market is increasingly short-term oriented, which is the problem.
Yeah.
And you have perfect alignment with what your fiduciary responsibility as a public company manager should be, which is your shareholder base. So when I look at dLocal today, it's base comp, no variable unless you're in sales, and a 5-year vested incentive program, which is mainly either performance stock units or just restricted stock units, period.
Just as a final closing remark from you, in this new reinvention of yourself, what are your aspiring would be either success or happiness in the next 3 to 5 years at dLocal ahead?
I always say, because people ask me, are you happy? My answer is, look, I manage an emerging market and foreign currency company across 40 emerging markets. Happy may not be the word. Like, I wake up every morning and there's some devaluation somewhere or some new currency control somewhere. But a professional realization, learning curve, growth, this is exactly what I wanted. And I'm absolutely thrilled with the opportunity that the founders of dLocal have given me. I think the definition of success for us is quite clear, right? It's first and foremost, I think we serve some of the world's most demanding tech companies. Like, if you look at our roster of clients, all these names I've mentioned are not fiction. They're all our merchants. So the level of demand that we have is from the most demanding companies in the world. So if we continue to grow our business at the 50% clip that we're growing TPV, clearly we're doing something very well, in addition to have found a very interesting market opportunity, right? So I think if we sustain compounding these levels of growth, that to me is the definition of success. And I trust, although that has not been the case, that eventually capital markets and the stock price does recognize that, because it's always happened, not over short periods of time, but over long periods of time, it does happen.
Pedro, thank you so much about this personal sharing of your journey and your own aspirations. Thank you. Yeah.
Thank you.